Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there. As always, check it out, the green fireplace. Yes, the fireplace is green. That's a good day, okay? In this video here today, we're getting into my top 3 stocks that I hold in my main private account, and I'm gonna show you everything in detail in which I own these 3 positions, the cost basis, how many shares I have, everything like that, and we'll get into the bull thesis around these 3 stocks as well, okay? Now, one of these 3 stocks I'm still buying. I'm still actively building out the position. The other 2 I'm kind of taking a break on at the moment from buying. So that's all I got for an intro. Hope you guys enjoy this video. As always, don't forget to smash that thumbs up button. That helps out huge in the YouTube algorithm. I appreciate all you guys. And I hope you appreciate me keeping you in the loop on some of my biggest positions out there, okay? Let me know if you own any of these 3 stocks. I would love to hear from you guys as always. If you have not downloaded the Hungry Bowl yet, it's on your iOS and your Android store now. We now have SEC reports in there, earnings calls, news, financials, keeping up with the stocks and the cryptos, as well as the markets in general. Read our daily newsletter. So much and so much more coming, guys. So, by the way, if you really enjoy that, please, for the software team, let them know about it. Leave them a review. That would mean the world to those folks. If you want to check us out in Stock Hub, that's our free Discord chat. It's absolutely free to join in there. That will be the pinned comment down there. Alrighty, guys, first position up here. This is my biggest position I have in my main private account, okay? It is WBA, what you're looking at here, okay? 20,000 shares. Cost basis of $40.46 on this one. We're up $186,000 as of right now, okay? Now, keep in mind, this is a stock I've owned for less than a year. Actually, all 3 of these stocks I've actually owned in less than a year. I've just built these positions really rapidly. And when it comes to Walgreens, that $186,000 in gains, that does not account for dividends received. And Walgreens in this account alone pays me out close to $10,000 every 3 months in just dividends, okay? So that is something to keep in mind there. Now, this is not a stock I am actively buying. Not that I don't feel it's a good price. It's just I've already built the position out to a massive beast. So as of right now, I'm just like, I'm good with holding what I have in terms of that one, okay? And I also own some Walgreens shares in my dividend account as well. So that's some food for thought there, okay? Roz Brewer, okay? It is her time to shine. Roz Brewer is essentially, you know, Walgreens, it wasn't like this was a bad business or something, but it needs some work, okay? It needs some work. And so it's somewhat of a turnaround play. And Roz Brewer has an amazing track record. Somebody that's been on Amazon's board of directors. This is somebody that's been the CEO of the Sam's Club division, which is owned by Walmart. This is somebody that did a phenomenal job at one of the top 3 positions at Starbucks, okay? But she's never really been the top dog of an entire company. And so this is her big shot, and I feel like she's in a prime position, and this company's in a great capital position with a great brand and a great opportunity here to have an amazing turnaround to make this company into a beast and obviously prove herself as a overall CEO of an entire company. And so 6 months today, if I recall, I think she's been on the job 6 months now, and I'm looking forward to what she pulls off over the next couple of years, okay? Now, in regards to Walgreens, this is something that confuses some folks when they look at revenue, right? Because they see, wait a minute, revenue is supposed to be down 5.8% for this year. That's bad. What's going on here, right? Especially with Rona Shots. Well, that's because they're selling off their Alliance business, okay? They're selling that off. They're going to raise over $6 billion there, and that was a big revenue generator for the company. But honestly, in my opinion, they got to focus on their retail stores and on overall distribution in the online space, e-commerce, their app, things like that, rather than this Alliance side of their business. So I think it's a brilliant idea, but keep in mind, if the Alliance business was still inside the business and counting against all the numbers this year, likely we'd see very nice revenue growth this year. So that's some food for thought there. Don't get tricked by the numbers, okay? Next year, the expectations are insanely low for this company. Only expecting 3.5% revenue growth from analysts next year. I think this sets the company up in a position here where they could potentially beat very nicely, and then Roz Brewer will start to get the big, huge investor community behind her as, oh my gosh, look what they're doing. Look at the numbers over at Walgreens. Keep in mind, if Walgreens just beats revenue by 1 or 2%, right? That's huge. One or two percentage points. That's massive for a company like this, right? I mean, if everybody's expecting 3% and they just come in with 5%, that's like, oh my gosh, like Walgreens is doing amazing, right? And so this is some food for thought, and especially when the company is trading at an insanely low valuation. Look at the forward P, it's under 10 on this stock, okay? Under 10 for a needs-based business? Yeah, in this type of market, you're not gonna find a lot of good deals like that out there, okay, which I absolutely love. And also, keep in mind, look at the trailing P and look at the forward P. It's always great to see a forward P that's substantially lower than the trailing P. That means the companies expect to get much more profitable over the next 12 months than the past 12 months, and I love that, okay? Now, when I look at Walgreens stock, I see a stock that I'm already getting good share appreciation on. I think I'll get more over the coming years, but honestly, to me, this stock is a better version of a savings account. Obviously, it comes with more risks than a savings account, right? Savings account, your money's guaranteed up to $250,000, but basically you're putting your money in that savings account and getting literally no return. When I look at Walgreens stock, I feel like I'm investing in a stock that I feel is insanely safe, like insanely safe because it's a needs-based business and the valuation's insanely low. I'm collecting a 4% plus yield based upon the shares I bought, and keep in mind Walgreens usually, ups that dividend each and every year, and the valuation's super low, so I think I'm gonna get good share appreciation over the coming years, especially as Ross Brewer, basically has success in this turnaround, right? And so I'm looking at a stock that I think is a better version of a savings account, essentially. That, if let's say the market drops in some huge way, right? And, a bunch of stocks get devastated, drop 20, 30% from here, I could easily sell out of the Walgreens position and put that money into those growth stocks. But for now, I'm very comfortable holding around $1 million just in this account alone, in this stock, collecting that dividend money. Look at this, okay? Just on September 10th, which was what, 5 days ago or so, 6 days ago, they paid me out $9,550 just in this account here, right? So basically, just for the shares I hold in this account, they're paying me out $3,000 a month plus in dividends. And this is a stock I'm getting capital appreciation on as well, and I think I'm gonna get a lot more over the coming year. So Walgreens, yeah, I definitely love this stock, obviously. I wouldn't have $1 million or roughly in it, right? And if you add up what's in other accounts, I have well over $1 million in the stock. I love the stock. It's why it's my biggest position in my main private account. And like I said, if the market for whatever reason dropped huge, I would bet you almost any money that Walgreens would not do nearly as bad as the market and do far better than a lot of growth stocks, and I could easily sell out of that position and go ahead and funnel that money into growth stocks, okay? So that's Walgreens. That's the biggest position there, okay? The second biggest position, I believe this one will overtake Walgreens Boots Alliance as the biggest position in this particular account. And keep in mind, this stock I hold in other accounts as well. So my position is a lot bigger than this, actually. But it is the Chef, okay? Tattooed Chef, $986,000 position here in this particular account. In this account, I own 50,499 shares, $18.78 cost based on this one, and we're up over $38,000 on this one so far. So it's off to a good start, but I think that is literally just the start, okay? The Chef, I wanna go over some numbers with you guys and some projections I have for this stock, okay? So Tattooed Chef right now, TTCF stock, this is in its awkward teenage years, in my opinion right now for the company, even though the company's like super young, right? No one ever heard of the Tattooed Chef brand like 2 years ago, and now you're starting to see it in every store out there. But in terms of where the stock is viewed, I call it its awkward teenage years because some people are like, oh man, this one's going off the tracks, and other people are like, no, it's on the right tracks, it's going great, right? But it's having some trouble finding that core investor base that is really gonna stay in the stock long term, right? And they definitely found some folks like myself, but there's a lot of folks that have questions, right? You have growth investors looking at this stock, and they're kind of like, well, it's a food company. It's a food company. I don't know. A food company? I don't know. Give me a space company. Give me an EV company, something like that. I don't know about a food company, right? So you have growth investors, a lot of them kind of being like, I don't know. The growth looks amazing, but it's a food company at the end of the day, right? You have value investors looking at this stock, and they say, no, I'm not buying this. Look at the valuation of it, right? Keep in mind, if you're a value investor, you're usually looking at food companies that are growing revenues, what, 3%, 5%, 7% would be amazing growth if you're a food company. Tattooed Chef just had branded revenue growth of 62% last quarter and overall revenue growth of 46%, okay? A value investor can't even wrap their head around this stock for a second, right? So they're out of the stock, right? Until, they get some sort of forward PE on it that would look, somewhat realistic to them. Value investors aren't touching this, this, right? And then you had like the Wall Street Bet Squad jump on for a little bit, but then they're like, well, I don't know if this stock is like one of those memeable type stocks, right? Like an AMC, GameStop, and can really get that movement. So it's had trouble kind of finding like who's really in this, right? Meanwhile, folks like myself are looking at this and I'm following the underlying story, okay? You know, everything else can be everything else. I'm following the underlying story with this company. Look at what's going underneath the surface. Look at what's going on with the actual business model and run some projections on the stock, okay? So 5 core points here, right? One is the company has a relentless management team. They do not stop at anything, right? You would think they would have been content with the type of stores they got into, and they just keep pushing forward and forward. I mean, they've gotten into every single store now at this point that I possibly wanted them to get on over the next 2 years, and they did it this year, right? They're relentless. The innovation at this company is relentless. They're coming out with more products, more innovation at this company than literally any food or drink company I've ever seen in my 12 plus years being in the stock market. I've never seen a company in the food space launching products, getting products ready this quickly, and being this relentless with their pursuit of just, you know, coming out, what's going to be the next big hit, what's going to be the next big hit, okay? Relentless management team at this company, and you never, ever bet against relentless management teams. There are a lot of CEOs and management teams out there that, man, they get content real easy, right? And as long as they hit some decent numbers, they're like ready to go on vacation for 2 weeks, right? When it comes to relentless management teams, you do not bet against them. Ask anybody that's ever bet against a relentless management team that continues to innovate and just does not get complacent, and almost every single time you will lose betting against a relentless management team. You either say, I don't want a piece of this, I'll stay on the sideline, or you invest in it, right? I see people trying to bet against it, you know, on Wall Street, and I'm just like, you know, good luck with that. That's all I'll say with that. Good luck betting against relentless management teams. Second thing is 62% year-over-year branded revenue growth. You're just not going to find that almost in the food space in general, right? Other than another company I own, which is a very good food company. Outside of that, you're not going to find that type of growth. Why are they growing that much? Because so many people are moving over to plant-based diets. It is something that is becoming bigger and bigger and bigger. It's a space that is getting bigger and bigger and bigger, and this company is doing a phenomenal job building their brand and making products that are good. I've tried almost every single product this company has in stores, and every single product I've tried, I would describe it as it's okay. It's like a meh product, or I actually thoroughly enjoy it. The plant-based burrito bowl, like that is a straight up great product, especially for being a frozen entree. Like that is a great product. The enchilada bowl, I would describe that as a great product. So they have some products that are like dang good, and the rest of them are kind of like, they're okay. And for a frozen food company, that's a good thing, because believe me, as somebody that used to eat a whole lot of frozen food back in the day when I was making, you know, $8 an hour, $9 an hour, right? I've tried a lot, and man, have I had some bad frozen food before. Just, whoo, okay? Oh, don't take me back to those days, okay? Number 3, store expansion. Like I said, this company is getting into every single store out there. Walmart, they're in Walmart now. Target, they're in Target now. You know, Kroger, they're in Kroger now, right? They're getting into every big retailer you possibly want to be in. Costco, Sam's Club, they're getting into all of them, right? SKU expansion. Keep in mind, literally go to your biggest grocery store chain that's in your town, city, state, whatever, okay? And what you're gonna find is most frozen food companies will have 20, 30, 40 different SKUs for the big ones, right? Sometimes even 50 plus. And here we are looking at a situation with Tattooed Chef, where they're just starting to get into some of these companies, where they're just starting to get into some of these stores, and they have what, like 4 SKUs, 6 SKUs, 8 SKUs in some of these stores? Like they're on the pace to, you know, and eventually get to a place where they have 20, 30, 40 different SKUs in a store. So SKU expansion over the coming years is going to be massive, and the shorts are just completely missing that one, okay? And number 5, this company's on the road to becoming more than a freezer company. I pulled up trademarks very recently and things like that. We went to kind of the patent website, and we saw essentially this is a company that is going to become much more than a freezer company, and they've already hinted around to that as well. And so, you know, the whole short thesis about they're just a freezer company. By the way, in the freezer aisle, you can build multi-billion-dollar companies in the freezer aisle, just in that, right? But this company is going to become much more than just a freezer company, which is huge, okay? And so those are 5 big pillars there, okay? Here's the deal. If this stock If it goes under my cost basis, I will start buying more shares of this, okay? If the stock was to go under $17, I will be looking at 2024 call options in the stock. Those just came out literally this week, and so that's what I'd be looking at here, okay? Keep in mind, the stock's been trading at anywhere between a $1 billion and a $2 billion market cap recently, right? I am fully convinced that this stock is on its path to become a $10 billion plus market cap by 2030, right? And in order to do that, the company has to get to a place where they can do 300 mil to 500 mil of net income if they're going to do that, okay? So let's run some numbers here, okay? Now these are revenue numbers from me essentially, okay? And these are not my super bullish numbers, okay? These are not my best case scenario numbers. This is, I would call it a mid case, okay? I also wouldn't call this my bearish case, right? I would call this like a mid case. Like I'd be like, okay, they did pretty good, you know? But it's not like, oh my gosh, this is amazing. I have some other numbers for that, okay? 2022, I have them doing $330 million of revenue, which I think is definitely doable. If the company was to do less than 330 mil, I would actually be a little disappointed in this one. 330, I think, is in the bag, okay? 2030, I see them doing $462 million of revenue. 2024, I see them doing $646 million. Now, 2025, $872 million is my mid case, but for my bullish case, I have them hitting over $1 billion in 2025, okay? Now, the company's gone on record saying 2026 they're gonna hit $1 billion, but like I said, my super bullish case, I have them doing over $1 billion in 2025. My mid case, 872. 1.1 bill in 2026. 2027, I have them doing $1.375 billion of revenue. 2028, $1.71 billion of revenue. 2029, $2.14 billion of revenue. And 2030, $2.68 billion. Basically, from 2026 to 2030, I have them doing an average of 25% growth per year revenue-wise. And keep in mind, the company just did 62% branded revenue growth this last quarter. Obviously, they're not going to be able to keep up, 40, 50, 60% growth forever, right? That's going to likely come down in the back half of the decade. In my opinion, of course, this is such a relentless management team. Who knows? Maybe they, surprise to the upside there, and that's kind of where you start to get into some of those super bullish numbers, okay? So here's the deal. In the year 2030, they do $2.68 billion for my midpoint, okay? If they were to just have $300 million in net income, that's only 11% of revenue hitting the bottom line. That's not good. That would not be good, especially for how scaled out this business would be, how much they would likely have brought down cost and everything like that. And obviously like a premium they could get on their product, like 11%, I would not be super impressed with that, but just keep that in mind, right? If they were doing $500 million in net income, that means about 18 to 19% of revenues hitting bottom line. I think that's decent. I still don't think that's great. I think great would be like 23% to 30%. That, you start pushing up to those numbers, then you're at great numbers, okay? But yeah, so needless to say, I don't think this is like a crazy idea to believe they're gonna get to 300 mil to 500 mil a year net income by the end of this decade. And if that happens, the company could easily command a $10 billion plus valuation on it, right? Because you slap a forward PE on that, they do $500 million of net income, and you slap a 20 PE on that, or 20 forward PE or whatever, right? Or even a trailing 12-month 20 PE, you're at $10 billion market cap there, right? And keep in mind, if the company's still growing 20% plus, even if they're expected to slow down to like, let's say 10% or 15%, even if that plays out, you're still you're gonna command way more than a 20 on a company like that, right? Here's the best part, okay? That's not even my A-grade scenario, right? And also, keep this in mind, right? Although I would be disappointed if the company doesn't hit $10 billion plus market cap by the end of this decade, the company, listen to this, if they just reached $5 billion, which you could, if this company just gets to a place where they do 150 mil to 250 mil of net income by the end of this decade, this would still be a massive winner for me, right? I'm investing when it's a $1-something billion company, right? So it would still be a huge win, even if it goes to a $5 billion market cap, right? So this is some food for thought on that one, guys. So I hope you guys enjoyed me going into the Tattoo Chef numbers there. Needless to say, I'm pretty excited about that one. What is the third stock up here that's the third biggest stock in my main private account? That is Corsair Gaming, CRSR on this one. Now this one is one I am actively buying. I'm actively lowering cost basis on this one, okay? And I'll answer in just a moment like how much more I'm thinking about buying in the stock, okay? It's down 4.5% right now. Down about 26K on this one. Cost base is $30.91. I'm looking to get that under $30 ultimately in this one. Now keep in mind, if this one goes lower, like basically the lower it goes, the more shares I'm gonna buy, right? And so I'm looking to add maybe another 6 figures of this stock in this particular account, I wouldn't mind getting it up to like 750K in this particular stock. And when it comes to call options, this is the stock I'm probably the most interested in 2024 call options in, because I think it's a pretty decent probability this stock moves big fairly soon. And when I mean fairly soon, I mean over the next couple years. And the reason being is valuation's insanely low. It's in front of two huge industries that are growing massively, gaming and streaming, and I think it's just going to get bigger and bigger. Okay. Now I'm not going to talk super in depth about CRSR. I covered that stock. That was one of the 3 stocks I covered on 3 stocks I'm buying now, September 2021 edition. So if you didn't get a chance to check out that video, check it out now. CRSR was one of those 3 stocks. The other 2 stocks, by the way, are not Tattoo Chef and are not Walgreens. So make sure you check out that video. Hope you guys enjoyed this video. As always, make sure you check out the Hungry Bowl. Like I said, we're on iOS and Android now. And yeah, that's just, it's like the app you have to have if you're in stock market investing, okay? And we're just gonna make that beast better and better and better. Pin comment down there will also be for Stock Hub. If you're looking to join us in Stock Hub, that's our free Discord chat. Check it out now. Thank you for watching and have a great day.